Hey traders, wanted to bring you a topic that often come up during my conversation, whether live mentors in the mentorship or on the weekends when I train, or sometimes just in different chat forums. I get a lot of questions asked. Hey, what's the key to your success? How do you prepare for the markets? What do you do? So I thought I put together some nuggets for you to understand, how to really get the markets and how to understand the market. There is really no silver lining. There is no silver bullet. There is silver lining, which we'll talk about it, but there is no silver bullet other than really preparing yourself and training yourself. And when I think of trading, I think of trading as if I'm training for marathon. When I'm training for my first year in football, I'm first year of football, or coming back to the second year in football and padding up and really, just waiting for the first hit to get out of the way. In a nutshell, that's what I really think about trading. So I thought I'd put together, what do I do? What's the playbook really looks like for the pre-market, and what is the playbook for trading the open? And I wanted to bring to you a pre-market preparation, and most important, and its benefit, because there's benefits for anything. If you want to plan a trip, you gotta if you're going somewhere, you gotta plan a trip. It's gonna have its benefits. You're gonna know exactly where you're going. If you're going somewhere, you got to run a navigation system. I mean, not that you don't know where you're going, but why do we run navigation system? It's become very robotic. When the trading becomes robotic, it becomes consistent and it becomes easier. Let's talk about it a little bit. The playbook for trading the open, and I'll go right into this. Seriously, this picture tells everything. There's not much to say. The 90% is the mindset, 10% is the skill. A long time ago, one of my mentors said, "Hey, anyone can get in a trade, but there's two things that are super important. It's really hard to take your losses, so people don't get out of the trade, and it's even harder to take profits because people want more." So the fear that keeps people pile on risk, which means losses, and greed that keep people in the trade until they lose it all. I honestly, it took me a while to understand the phenomenon, and I still don't, till today, don't understand that if you have profit, you're making profit in trade, and you're not taking those profits, I mean, you clearly don't have life goals, because there is milestones in life, and if you're not taking those profits, can't help you. So hopefully this video kind of clears up some of that. What do we do for creating a daily market bias? Putting together your preliminary gap list, organizing your gap list, and I'll talk about that into tiers, like tier 1, tier 2, tier 3. I even have daily stocks to watch, maybe runners, daily runners, thumbnails, watch list, and then really sitting down and visualizing how your day is going to look like. Jesse Livermore summed it up the best. Money is made by sitting, not trading. Hashtag patience. That's the virtue here. That is the key in trading the open. I put something together for you all to kind of, if you want to read it on your own, but the open is absolutely a unique time for the markets. It is the most volatile time in the market because there's so much happening at the open. The volume, the prices, level 2, it's just going off, and sometimes you have to slow things down. And the question is, how do I slow things down? Well, if you want to play a video game, yeah, you can trade on a tick chart, you can trade on a 1-minute chart. Personally, even today, after so many years, I still rarely trade on a 1-minute chart, and that's a video for another day, because those are specialized gaps that I trade on a 1-minute chart. My go-to time frame is 2 minutes and 5 minutes, because it gives me time to really gather my thoughts. That's why most traders struggle. They want to, if they want to buy the open, they want to buy the first green bar. They want to short the open, they want to short the first red bar. That's not how it works. And if you're a gamer, if you play poker, you know the game. If even good gamers actually make good traders. Good gamblers make professional gamblers make good traders. You know why? Because both of them have patience and risk appetite. And it's one of the one of the key is and that's really leads to the focus in a pre-market routine. So, like I said, things happen very quickly. So it's imperative for all you to know exactly what your intentions are before the market opens. You want to short, you want to go long. Opportunities can be lost in an instant during the first 5 to 30 minutes if you don't catch it. Now, I'm not saying you won't have another opportunity, but that's where the bulk of the move will come from. And this is not, that's where you have to be absolutely certain what you want to do. No room for indecision. So let's dig into it. What the pre-market looks like. You know, for me, and I'm just going to go over the pre-market. Gotta have the proper mindset and morning rituals. For me, get on a treadmill, whether it's 10 or 15 minutes, and then get the blood flowing. I have a walking pad, sit stand desk, and I'm always on the walking. So I'm not sitting still. I'm actually, the body's in motion, the blood is in motion. I don't know if it is the sit stand desk, but it's changed the way I think. It just gives me it brings more, it allows me to enhance what I want to do. Formulate a market bias. And I'll walk you through. I have a slide here that talks about how we formulate a market bias. You got review QQQs, which is indicative of Nasdaq and SPY as S&P. Try to understand where the support and resistance areas are, and those are important because stocks will often trade in tandem with the market unless they're on their own. And there are few stocks that will be on their own, but most trade with the market. And then you just get a scan for compelling gap patterns. In your platform, you have a dollar gainer, percent losers. I have a scanner, and I also put a slide together from my own platform as well. I don't use the platform anymore because the scanner that I have, it gives me a better opportunities and quicker opportunity because it has a little bit more variety of what I'm looking for. And then daily watch list, carryover list from your nightly scans, strong, weak sectors, and then NASDAQ heat map. You can do all that. You can go to FinViz. I mean, there's so many free market scanners that you can use. And then you can rank gaps into tiers. What is your advanced gap strategy rules looks like, right? So that's what's important. Put favorite gap stocks on thumbnail charts in order of priority. Then you develop a strategy, trade your favorite tier 1 gap plays that we talked about earlier, and check the time, relevant news reports. Either if it's a natural gas report, I mean, that's only going to move natural gas. But if it's a CPI report, that's going to be market moving news. So be ready for that. All right, next slide will, just the illustration of what the gap ups and gap down looks like, and that's the scanner that I use. So, in this scanner, I love the volume. Volume is a big piece. I want to see how much volume is traded, where the price is, their daily ATR, and what kind of float they have. 0.35 million, and this one is 9,293 million. And then, some of these stocks, 293 million is going to catch my attention every single time. VRT. So I honestly, this will catch your attention. Gap downs, you have all these gaps downs, and this is that's your daily volume, 37 million, 293 million. So that's going to catch my attention. They already traded 37. So biggest volume pre-market, obviously today was Tupperware. Biggest volume, high volume, trending stock. Shop was trending higher. It's after hours, so this is scanners after hours, and already did look at this float so far, and then the 25 millions and this is from the software. I mean, this is from a TradeStation platform, so you can also do that from TradeStation platform. But I like this view better because it's a little bit more organized. So that's what I do. And then the last piece I have here is for you, and I have one more slide to really talk about the power plays. But this is kind of how we build the market bias. I mean, this is the QQQ charts. As you know, today was a gap down. But really think about this. This is, if you were to thinking here, this is the bearish bias. Why? We're breaking support under the moving averages. Looks like it wants to go lower. So if you had a bearish bias on this gap down, then you probably made good money. Right here, there's very narrow range and tight price action, and open is just a flat open. So what are you thinking? You're thinking, hey, listen, we've had a pretty big move here from here to here, and now we're consolidating in this range, and these are your support and resistance lines. And so break above this, I'll get bullish, and guess what happens? We pull back, gap up, and a follow through. This is a fault. This is a really gap and go in the market. So yeah, that is the bullish bias. As for right now, what's going on with the market? Today's gap down was bearish. It's been a very long time since we've violated the 21 period moving average, and we violated the 21 period moving average on a convincing volume, which also qualified for a distribution day. So keep an eye on this. I think we're right at support, but that's your major resistance. That's your major support. So we've got probably room to somewhere in a 50 period moving average. I also wanted to add a bonus slide on earnings reaction gap, power earning gaps. Right here, power earning gaps. And these gaps, these are all buyable gaps. But here are some criteria and the charts I use for Market Smith charts. These gaps will have at least of 10% move on a gap up. I mean, I put Microsoft and Nvidia, and both have some crazy moves here, as you can see. And just Nvidia and the volume will have a 200%. I mean, look at the volume here, and you got a little bit of indication here. It's the highest volume that we've seen in Nvidia for a very long time. And then earnings to price percent earnings report, minimum of 20%. Look at what happened here, 41%. That's what they reported. So that, and same thing here in Microsoft. But what usually happens is this between 10 to 30 weeks, between 10 to 30 weeks, these stocks will put a move of minimum 40% or 80% of the sample size that I pulled up. So wanted to bring that to you, and something that next gap up. I think ANET is recently, that was a good gap that qualified for this. I could probably put a picture there, but let me walk you through on the platform and what the platform looks like, so you have an idea. And here's the platform. This is how I have my platform set up for morning scans. Right here, I always have market. You can see it's QQQs right here, and then on the and then here is my right here is how I trade. So at the open, I'll have my 2-minute chart at the open, and when you go here, and then that's where I look for opportunities. So good opportunities here, like we talked about. The gap was bearish. My level 2 here is happening. You don't really need this when you have this, but I just eyeball this, the bid and ask, to get instantly telling me where the spread is. But any stock that I'm scanning, so for example, VRT, we talked about, I said, had a massive float here. Look at this, massive. But this one, I traded this one earlier. 2-minute chart. Look, this was a breakaway gap in VRT. Also breakout on a weekly chart. So when I'm scanning, here's how we prepare for the gap open. So this was gapping up. I already showed you the pre-market chart. The VRT was on a pre-market chart. Now, if this is what's happening here. Well, what's happening here is you have a breakaway gap. It's coming after green bar. So ideally, you want to pull back. The gap size is a little bit bigger than normally we would like to see. So definitely need to pull back before we play this higher. And it did just that. But most importantly, it had a relative strength. Look what the market is doing. And here it's starting to set up. You can see what's happening in the market. 10 o'clock, market is just getting ready to head lower. This thing at 10 o'clock is just consolidating. You've got open. You got a breakdown bar, because try to move higher. Breakdown bar, no follow through. Your entry is above this topping tail right over here, 32.40. And 32.40, you got to stop at the about right here, 31.50. So it had a 90-cent stop. And then if you missed that, you had another entry right here, also happened to be 2 minutes opening range breakout at 33. Let's call it an even number. And then your stop would have been right here about 32.40, so about a 50-cent stop, and you got a $34. So you got a 50-cent stop, you got a $2 move, and that's 4 hours right here. So multiple entries here, but most important to understand where I'm trying to have your mind go is how we use the market to our advantage. That's the most important piece. So if I were to bring this chart here for ease of viewing, then you can see here that Qs at the same time, so we overlay these charts, you have the 10 o'clock reversal time, Qs at the same time heading lower, breakdown bar, instead this one has a green bar. Now you want to see, okay, green bar, and then green bar consolidation here. This is really setting up. Honestly, it was just, if you are trading, and I told you where I took it, and where's my chart right here. I got in right up here, and you can get triggered here at 32.75, and then your stop is got to be right here somewhere, right here. You can't put a stop under this. That's not a good stop. The stop has to be here. Low of the day will be perfect. So you got about $1 stop, and you got a $3, $2 move right here. So great examples for this video. This is also a powerful gap. I believe I looked at this one, and this one also is showing as one of this power earning gaps. So let's take a look while we are live here. So VRT. So VRT, yeah, look at this breakaway gap on the weekly chart. You can see, wow, look at the earnings surprise here. So this is 10% move. Remember, we talked about it. Has to have a 10% move. Volume percent change on gap day, minimum of 200%. Well, you want to see something? Let me show you something. It's gonna show us, look, largest volume since base 1. You know where the base 1 was? Way down here somewhere. So that's where the base 1 was. And so this is a massive volume, and that's also happened to be breakaway gap. So so now this thing is setting up. EPS is up. Earnings surprise is 175%. Keep an eye on this one if you're listening to this video. VRT. Hope you guys enjoyed it. Have a great rest of the night, and we'll see you soon.